Salam, my good friend. Who's alive? 你好吗? All right. Good morning. Comment allez-vous? Let's get on with it. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis on euro, US dollar, Japanese yen, Canadian dollar, British pound, Australian dollar, so on and so forth. That being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but it's always wise to stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. Nice to meet you. Welcome to the community. I am trying to teach you how to be conservative. I want you to be patient and disciplined. I want you to have small lot sizes. I want you to have strategic plans set on your charts based on long-term technical analysis, macroeconomic analysis, fundamental analysis, and not try to get rich quick, not make a quick buck, not chase price, not be reactionary, so on and so forth. And we have a very interesting day today, don't we? That Fed meeting, huge. We've been waiting for this a long time. In fact, some people thought the Fed was going to raise interest rates last June. Holy smokes. So now we're finally here. And so it's a big day. It's a big day. For example, the Chinese stock market was up almost 10% today. Cool, because I own a whole bunch of that crap. Up 10% is not nearly enough, but it's a start. So anyways, a big risk today, and it concerns me. And if you're here to get a rah speech about how to go, trade, yeah, I'm not the right person for that. But I am wide-eyed, open, looking for opportunities. Right? I got to be ready, willing, and able. But my number one goal is to not lose a bunch of money today. The second part of that is, well, once the dust settles after today's announcement, we find out how the market has positioned itself, then we can do longer-term analysis on how to trade a trend versus an event. Today's an event. 2 p.m., we get the release of the news. At 2:30, there is a press conference. Those are events. I'm much more interested in the long-term trend, so be careful. Yes, and there's some good news out of Russia, but, that can come and go. Okay, so that's geopolitical risk. A lot of interesting things going on right now. And again, my number one concern is risk. And I hope you appreciate that and take that with you as a gift that might help you survive this thing called Forex. So anyways, while we're here today, ask questions, get involved, participate, treat each other with dignity and respect. I will do my best to help. I consider you the boss. I consider me a servant. So I let you guide where we go today. So let me know how I can help. Over the years, and I've been doing live training, if you will, for 20 years. And over those 20 years, people have asked me to write a book. So I did. They asked for free training videos. I did. They asked for paid training videos. I did that. They asked for live trading groups. I've done that. They've asked for my chart templates. I've done that. They asked me, Wayne, what kind of broker or which broker should I use? So I have links to Trader's Way. All those links are in the description below. Going back to choosing a broker, you want one that's fast. Trader's Way is fast. You want the spreads to be competitive. Trader's Way is very competitive. You want to get paid full swaps. Trader's Way is very, very competitive. They offer big swaps. Many brokers, because they know retail traders don't even care. So what they do is, whether you're long or short, it doesn't matter. They give you a negative swap. So Trader's Way pays you your swap. So if you think all of that is good, if you like business and ethics combined with your brokerage firm, Trader's Way has all of that. Therefore, because they earn my loyalty and respect, and you ask me, Wayne, what broker should I use? I recommend tradersway.com, and the link is in the description below. And if you're thinking, oh man, he just wants me to click that link so he can get paid commissions on my trades, don't click the link. If you're worried about that, just type in tradersway.com into your browser, go there. Don't click the link in the description below, but take my advice. Give Trader's Way an opportunity to earn your loyalty and respect. So here he is, and here we shall be. Right now, dollars weak. Oh, my voice. Let me clear my throat. Wow, it's scratchy, huh? Kick it over here, baby pop, and let all the fly skimmers feel the beat. Drop. Anybody recognize that? Cooling on the corner one fine summer day. Just me and my posse in MCA. A lot of beer, a lot of girls, and a lot of cursing. 22 automatic on my person. Got my hand in my pocket, got my fingers on the trigger. Anyways, let me charge my phone. What's up? Rolu's in the house. Hey, is Matrix in the room yet? Let me know when he's in the room. All right. Yeah, but do you recognize it? Yeah. We're talking mid-'80s. All right. Okay. Dollar down. Okay. Yen down. Swissy down. That's all risk on. And I'm a risk on dude. I'm a risk on dude. So that's all right by me. Euro down, CAD kind of turning up. It's been this combination I exited yesterday, and it's been up, down, up, down, up, down, up, down since then, but hasn't really done anything. So I think even though these are indices, I think the moves are still relatively tight. Okay. Aussie up, great. Okay. So yesterday I was watching, if you guys remember the live stream yesterday, I think I did it in the live stream. I definitely did it in the day trading group, where we talked about using commodities and Bitcoin as a canary in the coal mine for setting up risk on, risk off trades. That's exactly what I did yesterday. And got myself in a Euro CAD short. Why? Because oil had stabilized and started to rally in New York morning. And I translated to, okay, there could be, let's say, a 5%, a $5 move in oil or something like that, right? From the bottom, because of the recent volatility. So anyways, I noticed oil going up, and I said, well, who's going to be hurt the most by that? And I thought right away, Euro. And then who would benefit the most? Maybe CAD or Noki. And I just went with CAD. And that worked out really well. I was short for about an hour or so, and I was only up about 30 pips. And I got sick of watching it because after trading it, I'd been in it for, I had been staring at it for 3 hours, let's say, been in it for 2 hours or something, and I was up 30 pips. I'm like, I don't want to watch this anymore. So I went inside and cleared out an insurgency on my Far Cry 6, came back and was up 100 pips. And I'm like, oh, that's the way you do it. So anyways, and now it hasn't done anything. Okay. Right, Danish? He says, how do I wait? Well, I listen to the news. I read reports. I play games on my phone. I play games in my movie theater. I smoke cigars. Okay. All right. So that's cool. Let's do a quick round the world. I don't think we need to go very long. We'll start with commodities. There's that my oh my WTI. Okay, you can see yesterday off the bottom, you know, what was it yesterday? I must have traded somewhere in here. I think that's right. Yeah, that's about right. And so that worked out, and then, you know, and then the trade came back fine. And now we've tried again. Maybe we're trying again. Obviously, everybody's in holding pattern because of the risk event. Danish says, yeah, it's hard. Yeah, for sure. Yeah, for sure. Patience and discipline are the most important part of being a trader, and it's difficult. So things are easier now, though. So you can run Steam on your computer. So you have your charts over here, and I'm playing video games from my childhood. If I need a distraction, I can play Tomb Raider on my computer while I'm watching the chart. So I have two windows open, Tomb Raider 3, whatever, Tomb Raider Underworld or whatever I'm playing. And on the left-hand side is your charts, and it's just sort of a distraction if you need that. But yes, it is hard. Yeah, Lucas says, or tried weeks. Yeah. I'd almost argue that's weeks is easier than hours, but anyway, so the way I look at this is everybody's in a holding pattern to see how the rest of the market works. Remember, we know what the Fed's going to do. Of course, there's a risk the Fed does something different than what we know. Okay, but that's probably not too much of a risk. The second part that we want to know about today is, will the Fed give us a better sense of how many, which I don't think they really can except for the dot plot. Okay. Another thing is we want to know about their balance sheet. When will they start the reduction? And of course, they'll probably do the mortgage-backed securities, right? The MBS will go first. And then I have a feeling they're not going to touch the Treasury side of their portfolio. Okay. Wayne, do I have to complete the 65 hours of video lessons before joining the day trading group or the swing trading group? No, but you should be committed to doing them, because the groups are not, I mean, how do you say it? The day trading group is not very educational. You need to come to the group and you know what you're doing. Now, of course, you can ask questions, and that's totally fine. But we're more interested in applying trade strategies than me saying, okay, fellas, you know, here's a 21.55 cross. You know, what do we want to do here? You know, no. We're just like, this looks like it's, you know, if you're a bear, you're going to look at this and you're going to look at that and you're going to, and then you're, and we're done. Boom, we move on. And we're about doing versus me holding your hand. The swing trading group is a little different, well, quite different from the day trading group. Not only are we looking for bigger trades, but the thing is it's much more collaborative. So we do a lot of group work. So I might throw you in a room with 5 other traders and I'm like, you know, go do this task. And you're like, but I don't know what a stochastics is. I mean, okay, so you're going to learn from some of the other team and stuff, but it would be great if you had a grip on some of the basics, at least so you can communicate effectively with me or communicate effectively with other members of our live groups. Okay. Yeah, you should probably do the swing trading. Yeah, I agree with that, Jim. Because that's about technique. So you got to know the technique, right? Yeah, that's right. Make sure you have a mic. Make sure you have a camera. So anyways, my WTI in a holding pattern, but I was trading that yesterday. Also, there's your Bitcoin. Holy smokes, huh? Amazing. So I was in a cash position on Bitcoin yesterday, then I'm out of a cash position today, and I see that and I'm like, okay, I didn't get all the up, but I certainly missed the volatility, so that's okay. But what we talked about yesterday, again, was using Bitcoin as a yet another canary in the coal mine. Okay. And so once I see more bullishness than bearishness, but we're still caught in a range here, but we went from the lower bound to the upper bound, which is great. And you see I have it all trapped out. Okay, where we were farting around here, then we were farting around here, then we're farting back around here, and then farting here and farting here. So far it's just sort of a hill of beans. A lot of farting around. Later today, we're obviously going to get a lot of volume and volatility. So be careful with that one, because dollar's not going to move 10% today, but Bitcoin could. And which way? Yeah, which way? Good luck with that. Okay. Okay. So remember, today's decision by the Fed is already priced in. So I'm not concerned about the 0.25, right? The 25 bips. We got that priced in. And I don't think it's going to go 50 bips, but I mean, it could, but I don't think so. So what we don't know is what we're trading. And I don't know how you know things that we don't know. And therefore, if someone says, oh, if they lift, this is going to happen. Well, you know, so if they do this, do that. Well, that kind of is already priced in. We know it's like 98.3%, right, on the 25 bips. So that'll happen. And I think the only thing initially you're trading is not the 50 bips. Okay. And in the statement, it'll probably say the word steady. Okay. Which won't tell us anything except, right? The forecast is 50. I don't know where you get the forecast stuff. Again, I don't pay attention to that kind of stuff. I know what the futures market says, and it's right. So anyways, that's my forecast. And again, maybe it's changed. Maybe we can look at that. Okay. But again, maybe the only thing is a dot plot. Okay. Maybe the only thing is the dot plot that gets traded at the headline. But how many people? Okay, it's changed a little bit. There's a 3.7% chance. Yesterday, that was 1.7. So yes, that has increased. Okay. A week ago, right? We were talking about 97% chance. So this has dropped a little bit down. Okay. A month ago, it was 50-50. You can see this. We were talking about this, right? A month ago, I said, look, half the market is mispositioned. improperly positioned. Half the market would be pricing in trade plans based on 50 basis points. The other half was setting up on on 25. So no matter what happened, whether it was 25 or 50, half the market was mispositioned. I said that can cause a lot of problems. Now, that was 1 month ago on the 16th of February. Now we're here on March 16th, and it went from 45% chance of 50 basis points to 2.7. Okay, and now it's 3.7. So again, Meta, I don't know about no forecast. I don't know who's forecasting that. Nor do I care if they're right. Them being right is irrelevant as much as if they're wrong. To me, it's just sort of irrelevant. So this is what banks have priced in. Okay, this is smart money. And they're saying 3.7% chance of a 50 basis point hike. Okay. So right now we're 0 to 25. And so it gets raised from 25 to 50. Now maybe that's what you're seeing. Okay. The range of 25 to 50. But since we're 0 to 25, if we're going to 25 to 50, then we're talking about 25 basis points, bips. Okay. Okay. We're going from that to that. Okay. So anyways, I just look at this. Okay. So to me, that's more relevant because if the Fed instead raises 50 basis points, okay, then 96% of the market doesn't have that trade on. And that's more relevant. So I would expect if the Fed raises 50 basis points, which again, I'm not saying I expect or don't expect, I'm just saying that's not priced in. So I look at it differently. I don't care about some person's opinion on the Fed hike. Okay? That is how the market is positioned. You see the difference? So the market's positioned for 25. So as far as I'm concerned, because that's how they're positioned, that's what's done. Also, Jay Powell said 25. You guys remember the congressional testimony? He said 25 basis points. He didn't say 50. He said 25. The market's positioned now because of what he said under testimony. He didn't say 50. He said 25. So the market went from 50-50 straight up to, boom, 25, because that's what he said. Okay, maybe he changes his tone. That causes some other unique problems. But anyways, so that's what the Wayne do. That's what the Wayne do, right? Like, I don't have a forecast. I only know fact. And now the fact is, that's how the market's positioned. So if the Fed raises 50 basis points, there's a risk that the Fed slows the economy down because we have high interest rates, which can slow growth. And then the Fed moving aggressively means there's a risk of them raising interest rates too quickly. Yes, it kills inflation, but it also kills the market. And much of inflation is supply side inflation, which the Fed can't even address. The Fed can raise interest rates and reduce its balance sheet, but that won't get semiconductors into the hands of Ford Motor Company. No matter what you do with interest rate or monetary policy, it won't put gas into your tank at less than $4. So why? Okay? Why would the Fed raise aggressively? But whatever. So maybe they do, maybe they don't. But if they do, and that risk is the Fed does it too quickly, then I would expect some dollar strength. Okay? But right now, all right? Anyways. All right, yesterday, for a little bit, that occurred, and during that period, Australian dollar was strong for a little bit. Just a little bit of my trade for you. And now we're back to the next line. Okay, we got multiple lines in the sand. Very cool. So that's oil, gold, and Bitcoin. We can look at exotics. We're now at the bottom range of my peso trade. Oops, this one here. Okay, there it is, a new lower low. Okay, that is now that's 3,000 pips. If I lock in 21. Okay. So I can't quite see. I can't quite see. Now I should be able to. So if I put it here, that's $2,000. But whatever. So this is a big line in the sand that we've had for a while. This could get interesting. You know, I should probably lock in another $1,000. So right now I'm kicking off that 4-hour 21. It's a bit dangerous, but obviously the risk event here. I might adjust that throughout the day. But the interesting thing is we're still riding at 21.55. Oh, Maida, I see your comment. Yeah, I know you understand, Maida. I know you do. I'm speaking to the proverbial audience. But yeah, I know you understand. JR says, what's a good size for bundled asset allocation? I mean, think about it this way. Your decision-making process should be like, how many trades, okay, how number of trades should you have on to equal your account balance? So let's say if you had 10 trades that equaled your account size, so I don't know what your account size is, let's say 10 grand. Okay, now you can get your lot size on euro dollar, so you can dumb it down. I always kind of euro dollar this thing. Okay, 10 micros. I don't even know what a micro is. What's a mini lot? Mini lot is 10 grand. So one mini lot would equal your entire account size. So yeah, so you'd have to do 10 micros, build them up, and then you have 1x your account. And your goal at some point might be 4x. So once you catch a trend, can you get 40 trades on? to equal 40,000 in a position, but you only have 10,000 in your account. So you have to have a lot of profitable trades. So by the time that happens, you can probably get this closer to 5x. But you want to think about that, right? Like, what is your goal for the allocation? And what trend is it that you're building your account allocation upon? Okay. And you might change these numbers, and you might say 5 will equal that, but then you have double per trade, you have double the risk. Not that it's wrong, it's just that's how you kind of get there. Okay. But you're going to have to start with a goal like that where you're like, I want to get first to 1x, right? Oops. You want to get to 1x first. And that means a small trade. You enter, you get it profitable, you jam your stop at break even. Now you have no risk. Second trade, third trade, fourth trade. It could take you an entire month, but maybe at the end of the month, or maybe at the end of 2 months, you accomplish your goal. You have 10 open trades. You have 1x, right? So you're fully invested to the 1x. You have, right? You have all your trades open. They're all winners. Now, you might have 20 losers, but they're all tiny little losers. Okay? And now at the end of whatever period, you got 10 open trades, and then you're like, you want to rinse and repeat. Your next goal is the 2x. And you do it again, do it again, do it again. Now, the interesting thing is you really need a trend to be able to do that, especially throughout an entire year. Okay, and that often doesn't work without, a very big time horizon or a very strong trend or hedging. So you might want to break it down per quarter or something. Okay, so let's say April 1, you start looking for a trend and you say, okay, so you have all of April, all of May, and all of June. So by June by June 30th, you would like to have, like before June 30th, you would like to have 25 open trades. And that's a pretty decent goal. And of course, every single trade is profitable, right? So you have to start there, and you want to manage your stops so you're in it, and then you get 2 or 3 more, and then you move your stops to break even, all that kind of stuff. And it changes your outlook, right? It changes your outlook on how you manage your take profit and all that kind of stuff. Okay? So one of the things I teach in swing trading is your each trade that you take might have a 33 pip stop loss, but a plus 333 pip take profit. And so you enter and you never risk very much here, but if you can catch the trend, you let it run and you don't touch it. You don't touch it. Okay? And at one point, let's say you're up 100 pips. Okay, you move this to now -3, and there's a logic to that. Okay, if you get knocked out, you lose 3 pips. If you hit your winner, you got your 333. But at that point, you're adding a second one. You're adding a third one. You're adding a fourth one. You're adding a fifth one, and you're just kind of trading that same trend over and over and over again. And of course, the risk is during a pullback, you lose some of these trades. Let's say you hit a monthly target, and because you want to be in it for 3 months, you don't take profit. You haven't hit 333, but you've hit the top of the month. Well, you're going to have a pullback. It could be a 150 pip pullback. And if you had 10 trades open, you might lose 3 of the trades because those are the more recent trades. But then the trend takes over again early in the new month, and you rebuild those trades, and then of course more. And at the end of the second month, you got 15 or 20 trades open, and that's how you kind of do that. We need less volatility, and we need more sort of seasonality in the market. Right now we have, Omicron comes in, right? Remember those days? Every COVID press release would change the market one way or the other. Oh, did you see the COVID cases? Boom, it's down, right? You're like, what the hell? Not macro driven, well, kind of indirectly, but much more news driven volatility, right? And now we have geopolitical risk. Oh, Putin said this other thing happened. Oh, they bombed a nursing home full of pregnant women. And you're like, wait, why are those old people pregnant? But anyways, and that changes the market. You get crushed, right? So we got to get past that and back into just simple basic macroeconomics, which in of itself is difficult, right? Richard says you have to find a low volatility pair though, right? Well, it's not a pair. You just can't have VIX at 30. Richard says this could be all in a couple of pairs. Well, being a global macro trend trader, I would do something like sell all of these. So what am I doing? Yen. Okay. And you're like, Wayne, but they're going up. Yeah, they're going up now. Not all of them as well, but that's how you would do it, right? You would sell all of these, which means I'm simply buying yen. And there are pairs on here that I could also sell, right? Like there's more than Aussie yen, like is pound yen is there? Okay, but whatever, you can, anything with a yen on it. Oh, my PhD guy? I fired him. I just moved on. Forgot about that. Yeah, so I own an Omicron site. I forgot about that. Ooh, whoa, boo, 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 boo. And yet I fight these battles all alone. Okay. I don't think we need to do too much before we go into the big meeting today. Okay. Again, remember yesterday we were talking about the low, mean, middle, right? The mean, the high, and the low. Yeah, we just kind of went to the top and came back down. That all makes sense to me. I mean, the only thing you could do today, and I don't know if I want to be a part of this, even though I might do it myself, I don't really want to do it as a live stream example. Okay? That you could try to position yourself before the meeting. And like, if you think they're going to raise by 50 basis points, you sell euro dollar, jam your stop and walk away. I don't know about that. I mean, you could, I'm not going to be involved with it, but like I said, I'll probably do it myself, but I don't want to use it as like a good example of what you should be doing. Are we going to watch in the day trading group? Maybe. It wouldn't be the day trading group, though. I'd open it up to the swing trading group because day traders have access to the swing trading group. Right, Maida? So if you're in the day trading group, you're also a member of the swing trading group. So everyone's a member of the swing trading group. So I would open up that room and we can do that. The event is at 2 p.m. for the announcement. And I believe the dot plot's part of that. And then the next thing, because look, what do we care about? The Green Book, the Fed's economic projections. Now, they're not going to tell you the results of the Green Book, but you'll see it in the dot plots, let's say. Yeah, Maida, but you're such a sweetheart. I was in a cabin in the woods, and I got your email. Just like, it was just sweet. Yeah. Yeah. But, what was I talking about? Oh, yeah. So the dot plots based on the economic projections and stuff like that and the opinions of the voting members. That comes out at 2. The press conference is at 2:30. I believe it's going to be 25 basis points at 2, and we won't learn much else. The Fed will just say steady. They're going to maintain optionality, and they're not going to mention the balance sheet, or they're like thinking about maybe the balance sheet. One thing we might learn is that the Fed talked about 50 basis points, but then I don't think we'll hear about that ever again. And then at 2:30 is the press conference, and that's where Jay can kind of lean on a hip and say, all right, look, fellas, this is how it went, and this is what we're trying to achieve. And good, bad, and ugly can come from that. Hey, Richard, well, you know what? Unlike Harvard, we let you in our cool kids group simply because you have money. What's the prereq? A valid credit card. So you can buy your way into the Cool Kids Club, man. Join. Right? It's only money. It's not even a lot of money, right? But anyways. Yeah, where's Matrix? Did Matrix come in? Matrix said I was arrogant, which, I can be. But where is he? I'll bring it up again. Maybe tomorrow if he's right there. Yeah. But at the very end yesterday, I talked about cryptocurrency, and then I paid $5,000 to go to MIT and take a course. And Matrix came on and he said, well, look, you could do it for free on YouTube, on OpenCourseWare. I'm like, yeah, I know. But I'm like, but I paid the $5,000 and I got the degree, not the degree, but the certificate on my wall. And he's like, and he called me arrogant, that how dare I say that when there's people that are poor in the world that can't afford that and blah, 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 blah. I'm like, dude, it's not my fault. Some people have money and some don't. I'm not here to solve the world's problems, but I'll teach you everything I possibly can. Now, the second point I made is, look, I have $5,000. I can afford it. So shouldn't I pay? Like, if you can pay, shouldn't you pay? Like, isn't there some sort of moral obligation? I don't know. It's like people got pissed off that I said, oh, I got free Biden money. And I should donate it to charity. Dude, I went to a hotel, booked a room, AKA gave it to the hotel. B, I went to the bar, I went to restaurants, I spent money, I kept those establishments open, and I tipped everybody 30, 40, and 50%, despite the service being horrific, because they didn't even have waitresses at the restaurant. The bartender was stretched thin. They barely had enough cooks. The hotel didn't even clean our rooms. And I tipped big with my Biden money. And by the way, I spent way more money than my Biden money. And I put it all into the hands of people that needed it. And because they showed up to work, I thanked them personally. I told the bartender, I said, thank you for your service. Which is weird because that's usually what you say to someone that just returned home from active combat. Well, this dude or the guy in the kitchen or the woman at the front desk, they showed up to work. And I thanked every single person I could. Thank you for showing up and doing your job. So yes, I'm an arrogant prick, but back off. I paid the money because I could, and I put it in the economy. And as an economist, I think that's important. Right? And if you still think I'm an arrogant prick, or if you disagree with everything I just said, hey, this is what YouTubers say, right? Put it in the comments below. Okay? But I paid because I could. Therefore, I think I should. Cool. Meow. That's the date. All right. La, 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 la. Boo, boo. Thank you, Meta. Thank you. Yeah. And Lucas just said. All right. So I don't know what else to do today. I keep telling you, it's all risk, man. It's all risk. It's all risk. Be careful today. Be careful. It's all risk. Don't try to get rich quick. Be careful. So I'll leave it up. If you have a question or want me to cover a particular pair, like you're dying to see Euronoki, okay, let me know. But otherwise, I'm sort of risk averse right now. Okay. Dr. Rage is like, yeah, wait for the next quarter. That's somewhat of it, right? I have some conviction for next quarter based on seasonality and stuff. Of course, geopolitical risk might not be there, but you know what? Maybe things improve dramatically as far as geopolitical risk, and we move back on to global macro. One thing we could talk about is China finally confirmed last night that they are, I don't think they actually said they were going to do something, but they said that they were thinking that they might want to consider it of supporting the economy. And that's the thing we've been talking about lately, over the last maybe 3 months of, the People's Bank of China could do things like cut their RRR, cut their interest rate, and the Chinese government could do things like stimulus. Okay, and that seems to be the case now, and that was announced last night, aka China morning. And the Chinese stock market was up 10%. Now it's down way more than 10%. But it's good. Like, that's the kind of macro stuff we need, because you will probably see that play out in commodity currencies if the Chinese economy stabilizes. Now, right now, it's being crushed by COVID. So that's down for oil, that's down for gold, that's down for macroeconomics, that's down. But if the Chinese government can come in and stabilize things, then once, Shenzhen and other markets reopen, that may be good news down the road. Thiago says, Wayne, do you still believe the S&P 500 can finish the year up 10%? Well, that is aggressive. I outlined my month-by-month projection for the stock market in the swing trading group last week. We drew it out. And then we talked about it for an hour of how that would play out in the currency markets, right? So I'll stick to that. 10 is up 10%, maybe not 10%, but will it go back up 10%? Let's say in 18 months? Yeah, in 18 months, but maybe not by the end of the year. Yeah. Right? Okay. Wayne, can you talk a bit about what got you started in Bitcoin? I remember you didn't find it appealing because of the lack of fundamentals. Yeah. So the reverse of that is bum, 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 bum. It's highly correlated. So it went from just a random asset to a correlated asset, and that makes it tradable. It's pretty much it. Also, I guess you could say the industry matured, and that's probably where the correlation come from, right? So that's it. Right on. Yeah. Thank you, BMA. Com says, what about if China starts buying Saudi Arabian oil and yuan? I think that's a political card being played. And so it's I think, part of negotiations with the United States. So we'll see. Let's see if it happens. If it happens, I'll let you know all about it. Otherwise, it's a long conversation with very little likelihood. So, right? So I'll just kind of pass. By the way, so this is a follow-up from yesterday's oil rally, which was short-lived and I think can come back. I traded USD Kitty CAD. This one, Euro Kitty CAD. That looks like Noki worked even better, and that's based on Brent. So I look at commodities, and and I see this, and it might be something I end up playing again today. Okay, so yesterday this went up. This rally made me 100 pips selling EuroCAD. So now we got yet again another rally off this bottom, and that could be very interesting. Again, I think if you can get a trade on today, jam your stop at break even and see if you can get lucky. Don't go for 30 pips, go for 300 pips. Just jam your stop and just see if you get lucky, if the thing stays alive, and we go all the way into FOMC, and then pop, something happens and it's a home run for you. If you're going to take the risk today, remember, the markets might look the same to you. But what if there was 10, right? What if there was 10 times the risk? Okay. Should you take the same reward? If you thought there was 10 times more risk, should you take the same reward? No. You need to be compensated for the risk you took. So, right? So if you were up, let's say 30 plus pips, okay, jam your stop at break even and see if you can get 300. And it does this. And you're like, damn, boy. Right? Right? Or it does this. Okay? Milo says they will get it really bad if they do that. Who's they? You, Saudi Arabia? I don't know about that. But the question on the table has to do with petrodollars, right? So, yeah, I don't know. It's a political card. Oh, Milos has an economics degree? Cool. Me too. Oh, you like the sound effects, huh? Huh? There you go. Well, Martinez, we're not here to insult each other. So if you, right. So please contribute positive energy to our group. That's all we're asking for. Treat each other with dignity and respect. Pretty simple. Uber now charging 45 cents more for fuel. Yeah, even my gardeners are adding on a fuel surcharge. Pachow. Oil went up and then gold went up for a little bit, right? I mean, small ups. But if gold opens hot today at the New York Open, you might be able to get some Aussie on. Okay? What do you think? Is that going to hold? What's the difference between the swing trading group and the day trading group? The day trading group meets 10 times a week. The swing trading group meets once a week. Kevin says, would Rand benefit from a move in gold? Sure. Yeah. But they'd benefit more from dollar weakness. But yeah. I forgot all my cool sound effects and animations. Yeah, this one doesn't work though. It says it just doesn't work. This girl is on fire. Maybe if I do this. Nope. All right. So anyways, trying to get some cool sound effects, but I don't remember how any of them work. Richard says, that's what I don't understand. Gold been down, why Aussie up? Oh, well, that's the commodity play. Okay, in particular, outside of, or because of the situation in the Ukraine. It's a commodity play. So commodities up, you buy a commodity currency. Okay, so like Mexican peso, South African rand, Aussie dollar, Kiwi dollar, Canadian dollar, Norwegian crown, krona, crowner, krona, something like that. So it's just, that's how it goes. That's what you do. So watch those. So we're just back here. Okay, I'm tempering all my enthusiasm for everything. Currently, you mark the top and bottom of the New York Open here. I've already drawn support and resistance lines. We can zoom out a little bit. Double check why. Yeah, that makes sense. We're sort of, that's the mean. There's another one in here now too. Okay, that's developed overnight. Maybe tighten this one up a little bit. Okay. And going back even further, you can see based on this measurement here, the slope of the mean is negative. So that could help you set whether you're selling at the top or not, right? Y is equal to mx plus b. M is equal to rise over run. Okay? And M is less than 0. So, bearish. Oh, thank you again, Maida. All of that going into my cigar fund. Cool. Look at that. Wow, did you see that, Maida? It just popped up. Yeah. I activated an old feature. That's cool. Oh, for wine? Okay. Yep, okay. Fair enough. See, we're just holding. Okay, following trends. Well, Darko, it comes down to not just that the country is exporting gold, but it's the percentage of GDP that gold sales contributes to. So Canada is a very complicated, very mature economy. and it sells a lot of things, including gold. South Africa is less complicated, less mature. It's an emerging market, okay? And it does export gold, but gold has a higher percentage of South African GDP. Now, Canada might export more, okay? Like the United States and China, I think, are the two biggest exporters. So, but they don't have that same correlation. So it comes down to the percentage of GDP that gold represents. Okay? Richard says M is equal to mean. It's actually the slope of the mean. So you're looking at it in, not the mean, because a mean is a point in time. You're looking at the mean over time. But Darko, when it comes to Canada, you should look at like the general sentiment of the day for commodities in general. So very often you'll see all commodities or most commodities are up on a day or down for the day. And would that have an impact on Canada? Well, generally speaking, all commodity exporting currencies. But then to what degree? Well, depending on what other situations are happening in those economies. Okay? But yeah, so we'll just leave it at that. Oh, in Australia. Yeah, that's perfect then. Right. Okay, so that's how I kind of look at this. So if you know if you're a bull or a bear, this is pretty easy. If you know you're a bear, you're going to let it go up high and then you're going to dump it. If you know you're a bull, well, you have to at least recognize that the current trend on this 5-minute chart, if you want to call it that, is down. So I think if you're a bull, you should say, well, it's got to go up, it's got to go down, it's got to breach, it's got to pull back, and then maybe you get in the game. Okay? And it's a 5-minute chart. You can do that. Just hang out for a couple hours and maybe it does that. Okay? Was the market open yet? Yeah. I don't know the result of the ADRs yet, but, you know, I own a fair bit of ADR. So we'll see. Don't know what happened. But I know based on overnight that I was up. But the thing is, I've been down for a while, right? So we'll see how it recovers. Now, if you're a bear, you're thinking, okay? Remember, what do bears do? Okay? Bears sell at the top or the breach. Now, this could be your role reversal, and then the next one could be your next role reversal. Okay? So you might have 3 trades coming up for the morning. You know what I'm talking about? What do you stink? Smell like a plan? Richard says, why down? Because that's what it's doing. Well, it might be in a better position later today or tomorrow, but that's clearly not up. So if you're a bull, you need to wait for that time, right? It needs to change. Right. So Richard says, you should say you're waiting for buys. Well, what you would look for is a higher high, higher low. Do we have that? No. Nope. Okay. Exile say, hey, on a 4-hour, it's up. Okay, good. Then here, you're waiting for that. Okay. I don't disagree with the role reversal idea. I get that. But it also could be down here. Okay. The exile says, look, this is a role reversal. Oh, yeah, I got you. But it could also be here, for example. So which one? Why don't you let the market tell you? Okay. This is why we scalp our way into spot and swing trades. So that says, okay, well, great. But maybe not yet. Maybe not now. Okay. Based on that 4-hour chart, this could drop 100 pips before we find support. Cool. Well, let the market do it. Well, you know what? I think I'm going to go because I'm going to have to work probably 3 extra hours today. Oh, because of the Fed meeting. So I think we'll leave it at that. I think I made myself clear. You're going to have to make a decision on your risk today, whether you, right? Oh, I see what you're saying. Yeah. So anyways, Matrix, I was just saying, if you can pay, you should. That's all I was saying, right? That's all. I wasn't poo-pooing on the free stuff on the internet. I'm saying I went to MIT because I could afford it. Therefore, I should pay. Because therefore, MIT can put their content on the web for free. So that's all. Okay? So anyways, you will have to make a decision on your risk tolerance today. I'm risk averse. I don't see my job is to get you to trade and let's all get rich quick. So this is a risky day, all that kind of stuff. So be careful. That's all. Be very, very careful. If you try to make a lot of money today, that's the only way to do that is by taking a lot of risk, and I will teach you to be risk averse. I'm looking forward to general global macroeconomics, long-term trends, building, that kind of stuff. So just be very, very careful. If you're in my day trading group or in my swing trading group, we'll meet up today just before 2 p.m. I'll open up the room and we can hang out as a team, as a group. But again, I want you to be cautious. Okay? Martina's already talked about that. Okay? So just be careful, be careful, be careful. I'll see you guys at 2 p.m. Otherwise, for everyone else, I'll see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. I wish you the best. Okay? The Matrix says, yeah, have a wonderful day. It's all love. I call it as I see it. Yeah. Well, the other side of it, Matrix, right? If I have to spend, let's say, I usually spend about $1,000 on developing the PowerPoint presentations. Probably takes 100 hours of my time. So to charge a few $100, I think is pretty reasonable. Otherwise, I just don't have to do it. Right? I'll spend time with my kids instead. So anyways, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. See you later, eh? Oh, for sure.